Hi, everyone. This is Jason Brock of Wall Street for Main Street, an independent financial journalist and managing editor of the News Doctor's Eric Dubin. Welcome back for another Welcome to Dystopia podcast. This is episode number 10. Eric, thank you for coming back on.
It's great to be here. Thanks.
Now, Eric, we have a lot going on in the world. One of the main ones, and Zero Hedge saw this coming months ago, they told people actually to buy credit default swaps on Glencore months ago because they saw the copper price collapsing. It's Glencore. I'm seeing a lot of news stories in the alternative media talking about how Glencore's worse than Lehman Brothers. What's your feeling on this?
I don't think it's going to be worse than Lehman Brothers. I mean, they have a significant amount of assets. And, Lehman Brothers is like a switchboard for the derivatives positions and the interlinkages that, you see directly in the banking sector for a mega bank like that. Obviously Glencore is a huge corporation. They're a major player in the commodity space, and there's an enormous amount of derivative positions tied to the provisioning of their business and the relationship that they have with all of their customers and the investment banking sector as well. But it's not quite the same scenario as Lehman Brothers per se, because they do have a huge amount of assets, and they're in the process of trying to whittle down assets and curtail production, and they're pulling in about maybe roughly about a third, a little bit more of their zinc production, and their actions alone are going to probably pull about 3% of the zinc 2016 mine production flow off the market next year. And that was announced, it was last Thursday evening. They put quite a bid on base metal prices and got some enthusiasm going in the marketplace because people were thinking, here's an example of how the supply is going to be constrained on a going forward basis, as we have been talking about, particularly in the precious metal space, but base metals too. As Rick Rule likes to say, that the biggest cure for a bear market is a bear market. It has the lower prices that end up bringing supply curtailed in the marketplace on a going forward basis, and that's where we are with Glencore. And with copper and with zinc and precious metals in particular, I mean, we just have had such an enormous amount of pressure in the market from the cost of production exceeding the marketplace prices for silver and gold in particular, but it's getting pretty bad in the base metal space too.
Yeah, I think the difference for a lot of these base metals there compared to gold and silver is for iron ore, steel, copper, a lot of these other base metals, is the demand is nowhere near as strong as it is for precious metals and other commodities like food and things like that. But what you have had is these, whether it's Glencore or these other commodities trading houses with similar business models to Glencore, or a mining giant, the Brazilian mining giant like Vale, which is a base metals powerhouse. I bought that stock after the 2008 crash, I think around $2 or $3, and it went up a lot, went up over 600% in a year or two. But what you have though is where not only have these mining giants and Glencore, but you have these entire countries. They went all in on China. So they believed the China miracle. They took out lots of debt throughout their entire economy. Brazil took out massive amounts of debt to build out infrastructure so they could move commodities easier and faster with ports and things like that to China. And, now things are going in reverse. So you have the asset values, the commodity prices have fallen, their cash flows have fallen, their debt to equity ratios are now disgustingly bad, because they're stuck with massive amounts of debt that were predicated on, China still growing, much higher commodity prices and things like that. So that's why we're having a bust right now that just started in the recent past in base metals. We've had a bust for 4 years already in gold and silver. We've had a bust for oil for 12 months, and the base metals, Eric, were surprisingly very high, throughout those busts. It was very surprising to me. I was talking about this 2 years ago, to see the copper price still at $3.50 a pound. Now it's closer to $2.30 a pound. It's been dramatically cut. I expected that to happen a lot sooner. So you have a case now where we're seeing, the commodity currencies, the base metal producers, whether it's Canada, Australia, Brazil, their currencies have fallen a lot. They're mining companies there that produce a lot of base metals, either iron ore, copper, and things like that. They have a lot of U.S. dollar denominated debt, and they owe the debt in dollars, but their currency is falling, which is what they earn their revenues in. So it's a triple whammy basically, where their commodity price has fallen, their currency has fallen rapidly against the dollar, and they still owe dollar-denominated debt. So are we going to see governments collapse like Brazil and stuff with debt downgrades, or what do you think the end results are going to be for some of these developing world countries and commodity currencies?
Well, if you look at countries like Brazil or South Africa, there's just so much turmoil going on lots of different fronts when it comes to their economy that, in the very least, you're going to see, in the case of Brazil, transitions from an from an electoral point of view, and there's no doubt that we are on the worldwide recessionary track and a deflationary track on top of that too, because bad assets are going bad on balance sheets in the financial sector and beyond. So this is kind of a deflationary economic downturn that's in the works, and so at some point, maybe like late 2016 or something like that, we might see signs of things turning around after central bankers most likely respond with a lot more liquidity on a going forward basis with QE4 in the United States and other actions thereafter. I do think that we are going to see some kind of a market-driven, financial market-driven downturn in 2016, and it's going to spill across the world. And countries like Brazil and South Africa and other countries that are struggling with dollar-denominated debt are definitely going to feel the pain from this. It's going to spread. It's a systemic risk issue too.
Yeah, it's lowered mining costs for some miners, but it only benefits those miners a lot if they don't have a lot of debt. So you have a situation, I'll use Petrobras, and I've talked about this in the past. Petrobras has a really bad debt-to-equity ratio. At one point last year, it was 7-to-1 debt-to-equity, which is insanely leveraged. That's like, investment bank almost, or hedge fund type of leverage, although, some investment banks were 40 or 60-to-1. But, 7-to-1 for an operating commodity producer is insane. Now I think the debt to equity for Petrobras, they've been selling off assets. They plan on selling $60 billion more, is down to maybe 2-to-1 debt to equity. That's still pretty bad. But, they're planning on raising money from China and Asian banks. I read their Q2 2015 financials, and you look at Glencore, and Glencore is just in emergency capital raise mode. They're selling assets like crazy, like you said. I think they just sold $2 billion of copper assets at fire sale prices this week. They plan on selling another $1 billion or $2 billion in gold stream and silver stream agreements to, Franco-Nevada or Silver Wheaton. Those guys are going to pick up great deals for pennies on the dollar probably. So, we're seeing a situation here where if you have cash, it's king right now. You can go out and get some really good deals long term. But I think the main point here, you brought up deflationary. From an Austrian school definition, the money supply hasn't collapsed, but these were dramatically overvalued assets that were drastically inflated with asset price inflation, and now we're starting to see them, become drastically lower in value. So from a Keynesian perspective, falling prices is what the Keynesians call deflation. So maybe it's Keynesian definition of deflation, but I don't think the consumer, Eric, maybe with lower gas prices for a while, although gas prices look to have bottomed and are starting to have a rally, I don't think the consumer is going to see the guy on Main Street, I don't think he's going to see that many benefits of deflation.
Yeah. Basic goods are definitely going up in price, and we've had ongoing, it's like a war between deflationary forces and inflationary forces, and in financial assets since 2008, we've seen just a gigantic flywheel dynamic of deflationary crash economic pressures coming out of the financial system and then spilling over into the real economy. But Keynesians frequently confuse deflation versus disinflation. Disinflation being, the process of prices falling primarily because of productivity gains. You can see that as well in electronic markets, computers, things like that. It's very well understood by most people.
Yeah, and these Keynesians who haven't read any Austrian school economics, they haven't read, even Economics in One Lesson by Henry Hazlitt or How an Economy Grows and Why It Crashes by Peter Schiff, which are beginners' books. They're acting like they know Austrian school economics and they bash it. But look, almost all the inflation that's been created, and there's been a lot of asset bubbles that have been created from inflation and credit bubbles, whether it's the housing bubble or technology bubble. And, they definitely got the bubbles back going again after the 2008 crash. They had the banks changed the accounting laws, and they started pumping mass amounts of inflation onto bank balance sheets so they can earn a profit. And stocks, bonds, stocks, bonds, and real estate. When these asset prices go up, that's where the inflation went, and that's where von Mises and Rothbard talked about where the inflation would go first. Before it went into massively into consumer prices and things like that, they expected it to go into the capital markets first. That's the Cantillon effect. And the Cantillon effect is, the money in an inflationary scenario, it doesn't go into each good and service distributed evenly. It goes to the people who get the money first. The U.S. government, Wall Street, hedge fund managers, investment banks. Those guys have the ability to borrow the money first, and they spend it, and they were buying assets with the money. So the Cantillon effect says, the money goes to the people at the top who have the best political connections first, and they spend the money, and then the inflation starts to trickle down from the capital markets and other stuff then into the real economy afterwards.
Yeah, and keep in mind as well, too, that the powers that be were targeting the resuscitation of the bank balance sheets across the board, and the majority of the assets held in the banking institutions are held by the so-called 1%. And so, you have this kind of lopsided inflationary process. It's not just that the individuals that benefit by being closest to the spigots from the government per se, but it's also indirect in the sense that the very wealthy are the ones that benefited from the resuscitation of the financial systems rebirthing from the crash, because they're the ones that owned the assets that were targeted for the wealth effect by the Bernankes and Yellens of the world. They attempted to try to, quote-unquote, save the economy by saving financial assets and reflating them, but, that's two steps removed from the real economy, because the majority of people don't actually have the financial assets that would help them ride up the ladder of reflation. So, now in the United States and in many Western countries, we have the largest wealth discrepancies in our history. It's just one more thing that is added on to the political morass and instability that our system has become.
And that's not because of capitalism, Eric. Yeah. Although capitalism will be blamed, the free market will be blamed for this. That's because of the Federal Reserve picking winners and losers, and Congress, crony capitalists and deals, and lobbyists picking winners and losers, and politicians picking winners and losers. So we have a situation here where the system is so corrupt, the Federal Reserve decides who gets all this free, easy money so they can make all these new profits on the wealth effect and things like that. And the Japanese central bank says, oh, you're an investment banker and a hedge fund manager. Oh, you have a lot of assets under management. Sure, you can borrow a couple $1 billion from us at 0% interest rates and do a yen carry trade and make investments like that and pocket, $10 million in interest income in 1 year and things like that. So
and what's really funny about all this stuff is that we're constantly being told that, the Federal Reserve has political independence and central bankers around the world are very independent from their systems, when it's just a crock of BS, because
these guys,
the banking
I agree.
sector executives are capturing the system and using it for their own means.
Not only that, Eric, but we have the central banks coordinating things. I mean, listen to Dr. Mark Faber interviews. He nails it. He thinks, that in Basel, Switzerland, at the Bank of International Settlements or other G20 meetings and things like that, I know at the IMF these guys were all together. You have, the European central bankers, Japanese central bankers, American central bankers, England or UK central bankers, and Chinese central bankers. They're all sitting together negotiating who gets to print money and take turns doing this. It's insane.
Yeah. Government for and by the bankers.
Well, since we are talking about bankers, we've seen Deutsche Bank come out with big losses. Do you think then that why do you think then that they're announcing the big losses right now?
Well, they had to. I mean, their balance sheet has holes in it. I mean, there's definitely smoke coming from Deutsche Bank. They have exposure to players that have counterparties that are presenting counterparty risk that is just threatening the very solvency of Deutsche Bank, and therefore they have to do their capital raise. I mean, they're probably responsible for why the Federal Reserve injected a lot of treasuries into the global marketplace last month. And Dave Kranzler had done some yeoman work looking at the reverse repo market, and the statistics on that for September are just eye-popping. In fact, we should probably put in the show notes a link to the article that he did where you can see in a graphical form that, over $400 billion were dumped into the financial markets in terms of, treasury injections. The reverse repo, just to back up and explain things for people in the audience, a lot of the derivative positions that a Deutsche Bank or some other, investment bank will hold has to have collateral when the trade is put into place, more typically than not. Treasuries, like U.S. Treasuries or German bonds or what have you, high-quality capital or collateral is used to back up those trades, and there's been a shortage of collateral in the marketplace. The QE3, for example, had the Federal Reserve buying tens of billions of dollars worth of treasuries in the marketplace and injecting those funds into the balance sheets of banks that were held in custody on the Fed balance sheet itself and in the New York Fed. And so, that, amongst other things, were removing a lot of high-quality treasury paper in the marketplace that serves as collateral for the underlying derivatives marketplace. And the amount of liquidity that is represented by the actions that the Fed took last month to address a derivatives market crisis is the thesis that Dave Kranzler was putting out. And I think it actually is smoking gun evidence of how much turmoil has been going on in the marketplace. I remember back in the early 90s when repos and reverse repos were taking place that CNBC and Bloomberg would always talk about it on television and in their news reports and so forth as if it was a big deal. But what was interesting about last month's story is the fact that it was hardly reported. I mean, very little information has been out about what amounts to the largest reverse repo in world history, or at least a couple of them over the course of the month. And even throughout all of 2014 as well, we can see that the Federal Reserve was using these tools on an order of magnitude greater than any other time in history. And I think when people look at this, and we'll put a link to the article, and you can see the graphic that they put together. It's pretty telling. I mean, there's a lot of turmoil under the surface that's being suppressed, and for the time being, we've got to hand it to the powers that be, the central bankers and the Treasury departments and equivalents in other countries around the world have actually been able to keep this juggling act going. It's quite impressive, but at some point, when you have companies that, like Deutsche Bank, can sustain a 2%, 3%, 4% market move against their asset book and go insolvent because of the leverage that they have, I mean, this whole too big to fail thesis and operating paradigm will only exist until something blows, and the system is so unstable as it is that it's just a question of when, not if. I mean, it's broken. They cannot fix this problem, and they try to fix it by adding more debt, and you can't fix a debt problem by adding more debt.
Yeah.
It's just it's quite astounding to watch this happen because you can see what the end game is. You just don't know when it's going to happen.
Yeah, and the people in power have decided they have a tough decision. They could either have crashed now at any point or it can crash later. So they've been deciding that they'll delay the crash as long as they can. But as the Austrian school economists, we know that there's repercussions and unintended consequences for them delaying the bust, which is the cure to all this debt problem as long as possible. It's going to grow bigger and bigger and bigger, and the bust is going to be even more painful down the road. In terms of the reverse repos and things like that, it sounds like, instead of quantitative easing, which used to be announced in the past, those terms, due to polling and other stuff, became politically unfeasible. Bailouts and quantitative easing, those are phrases now that the bankers are going to try to avoid, and things are going to go, more covert, that they're going to switch to reverse repos. And I reported on the story currency swaps in May of 2014, how they were going to explode in size. And we're seeing, trillions of currency swaps probably behind the scenes just to buy a little bit more time, Eric, we're probably going to see the currency swaps explode even further. Maybe they'll, I don't know if they've banned short selling on Deutsche Bank yet, but that'll probably happen, or they'll do a bail-in or something like that and force, some of the people with accounts there to take a haircut. I mean, these are all totalitarian effects, whether it's bail-ins, bailouts, financial repression, cashless society. These are all symptoms of totalitarian. Keynesian economics is in there too. Totalitarian regime where governments and bankers combine to take more and more control over people's lives and decide, where you can spend your money, what you have your savings. And Keynes didn't want people to have savings, and neither did Marx. This goes back to Marx's view of labor theory of value and also the savings glut. Marx believed that people with a lot of savings were evil and exploiters and hurting the economy. And Keynes was not really that much different. So we have a situation now where just to delay a collapse in Deutsche Bank or things like that, where they have to print, trillions of dollars behind the scenes just to buy a month or two or 6 months or something, it's insane.
Yeah.
And I'm sure they'll ban short selling too on Deutsche Bank too, because it seems like an easy short now, right? Because these losses are just the tip of the iceberg. I'm sure they have much larger losses, but I'm sure they'll change the rules on being able to short this stock, because even when it looks like a slam dunk like this, normally with the banks, they change the rules.
Yeah, it might be a little harder for the powers that be in the United States or London or what have you to do that kind of a move just yet. I mean, it's funny, 2 months ago, people were making a big deal about how the authorities in China were making it illegal to short stocks, and they were, instructing Chinese brokerage houses to purchase on the open market and all of these other things that they were trying to do. But people forget that back in 2008, 2009, we had restrictions on, market action, and we are now seeing BlackRock making arguments to have withdrawal suspension periods for mutual funds during periods of market turmoil, and all of this notion that the West is a bastion of free market economics is just it's no longer the case.
Yeah, and the Chinese learned it probably from the U.S. where to do all this intervention, right? I mean, the Chinese are kind of getting their feet wet and learning markets again. A lot of them worked, whether it's at the ones who work at the People's Bank of China now and in the financial departments of the Chinese government, they worked on Wall Street or learned in U.S. universities. And I'm sure they took notes on what happened in 2008, the interventionist policies the U.S. did. So, this is just ridiculous that, we have one government saying, we can't, we should be allowed to do this, and, you shouldn't be allowed to do that, and the other government did the same thing. Only a couple of years before. Yeah. So I guess they're hoping people don't remember anything nowadays.
Before we leave the subject of the reverse repos, too, I want to point something else out. We had the Federal Reserve do the tapering process starting in December of 2013. And 2014 is when the reverse repo/repo market went berserk. When you look at the graphic, there are times when you look at a single chart and that chart or picture truly does say 1,000 words, and this is the case with the reverse repo market.
It's covert. Yeah, because of the politically bad words now of bailout and quantitative easing, they've had to switch the liquidity and money printing and other bailouts and stuff. They've had to move it underground to new programs. And this is what I've been saying for a couple of years now. Yes, they're going to say in public that they've stopped printing money, but they're still reinvesting treasuries, right, into other. So they're reinvesting those, and they're
rollover of maturing treasuries as well. Even though Janet Yellen was talking about suspending that as a way of shrinking the balance sheet, but that's all talk just as much as the whole interest rate normalization shtick that they do.
They've been talking about reducing the balance sheet for over a year, right? And the balance sheet keeps growing. It's over $4.4 trillion.
Yeah. Even back in the green shoot days of Ben Bernanke, 2010, we've been living with these lies for a long time.
Well, welcome to Dystopia. Just another ridiculous thing. Speaking of another type of dystopian thing, have you seen the ads on Twitter, Eric, talking about how good the TPP is for free markets and free trade and for small business and jobs in America?
What can you say? There's a lot of interests that are going to be benefiting from the TPP, and U.S. Chamber of Commerce is probably one of the bigger pushers for it, and they're dumping huge amount of money into ad campaigns to support it.
Oh yeah, I was shocked to see the ads. Their ads for those of our listeners on Twitter. If you follow financial stuff, any of the financial news websites or investing stuff, I'm sure you're starting to see the ads. I see them every day now for the last week or two. That how good TPP is for the average guy in the middle class on Main Street in the USA. And just read the comments underneath the ad. It's really funny. You know, people are starting to slowly wake up. At least some of the people on Twitter, they know what's really going on. I mean, go back to NAFTA. I mean, the American people were sold the same bill of goods, right, on the North American Free Trade Agreement, how good it was going to be for American jobs, and look what happened.
And that funny guy, Ross Perot, and his giant sucking sound, we heard it. I mean, Americans get it when it comes to NAFTA and the whole internationalization and outsourcing and offshoring of jobs. I mean, it's been a disaster. I mean, yes, we do have more trade as a result of deals that have gone through, but it isn't free trade per se. I mean, the Trans-Pacific Partnership has 29 chapters in it in terms of, the volumes that discuss different industries and so forth. Only 5 chapters of the 29 deal specifically with tariffs and quotas. I mean, the majority of the Trans-Pacific Partnership text is focused on protecting oligopolies and monopolies and large industries. And I mean, taking the pharmaceutical industry as an example, I don't remember what the generic drugs protection is. I think it's 17 years, 19 years existing right now, but they're moving it to 30. That's going to lower the cost of pharmaceuticals? I think not. I mean,
going to create a black market where, generic companies in India and Canada and Mexico, they're going to make a lot of money then because Americans aren't going to be able to afford the price increases in medication.
Yeah.
It's going to create, medical tourism where, this is already going on to a certain extent where people who need medications, if they live in the Northeast, not a couple hours away from Canada, they take a bus up to Canada, buy their medications, and come back.
Yeah.
There's going to be unintended consequences to these laws for sure. But speaking about internationalization, I found this story on RT last week, and it's China launches global yuan payment system. China's central bank has started a global payment system which provides cross-border transactions in yuan. The China International Payment System intends to internationalize the yuan and challenge the U.S. dollar's dominance. So it looks to me, Eric, like, we've seen China do all these currency swaps in at least publicly stated those amounts of the currency swaps with a lot of their trading partners are only for, $1 billion here, tens of billions of dollars, not, massive amounts of money that can handle all global trade, but that was just the public amount that was stated. But with the developing world in a lot of trouble, maybe these guys, we could see some defaults on U.S. dollar denominated debt from developing countries. Though they're also China's trading partners. Maybe China, with this new system, they're going to start giving out new loans to these countries now in yuan in the near future.
You have the New Development Bank, previously known as the BRICS Development Bank, and that institution can take some of the same type of efforts that the International Monetary Fund has traditionally been known to do. So when a country would get in trouble from their balance of payments point of view or debt or whatever, they could get a loan from the IMF, and the IMF would do demands such as structural adjustment programs and austerity and things that you see with Greece as but one example in exchange for the loans. And so when you have alternative systems up and running, China can in fact help secure economic security for other nations. We saw that with Russia. This whole sanctions regime that's been put in place to basically beat Putin and his friends over the brow, and in the hope of shaping Russian politics, has largely failed because of the strategic relationship that China and Russia has first and foremost. I mean, more so than any other relationship at all. That has saved Russia economically from an enormous amount of the pain. I mean, they're still suffering, of course, but the impact of sanctions have been pretty much trivial because of this high-level relationship that they have with China and the rest of Russia's trading partners. But, this is an interesting announcement because the way to think about it in terms of trying to explain it to people who don't have a lot of experience when it comes to international markets and such, is that China is laying down pipes for infrastructure for the transaction of goods and services and the payments that are associated with that. And as it has existed up until this point, you had those currency swaps with individual nations, and you have clearing structures that are put into place, but it's not quite the same thing as what exists in the Western world when it comes to the SWIFT system for interbank payments, where basically any Western bank anywhere in the world can send money to any other Western bank through the SWIFT system using the dollar as the transaction currency, or British pound or yen, euro. These systems exist where point-to-point transactions can occur and are facilitated with ease given the Western's international banking system. China hasn't had this for the yuan, and that's what they're building. And in a nutshell, that's really what this means. No longer will a major Fortune 500 company have to go through, a specially designated Chinese bank to do a currency transaction for some trade that they're doing. Whereas now, or in the not too distant future, once this network is built up, you can have a lot more direct point-to-point commerce, and it'll continue to expand the renminbi as a currency for transactions and trade. They recently passed the Canadian dollar and the Australian dollar, I think, a year and a half ago or so, and they are now the yuan, the renminbi, is now the fourth most used currency worldwide for trade, and that's going to continue to grow as this system helps facilitate transactions, and as China moves from second largest economy in the world to on par with the United States, they're going to need this system, and this system is going to help build their commerce and their economic power.
Yeah, the yuan or RMB, it's becoming a really big transactional currency. It's not being used for a massive amount of reserves yet, but that's the next step. And really, I think the most important point is none of these programs were in place before 2008, really. So you've seen, whether it's the Asian Infrastructure Investment Bank or the BRICS Bank or this new program or the currency swaps, these things were not in place before 2008. And a lot of these countries were caught a lot of the U.S.'s trading partners were caught drastically off guard by how bad things were with the banks and the derivatives market and things like that. And, they just said, we need to start working on an alternative system where the leverage ratios, where things can't collapse this much every 7 to 10 to 12 years. We need to work on a much more stable system. So I listened to that Willem Middelkoop interview or presentation he was giving, and he said he went over to China, and he said, they're working step by step on laying the foundation to building the next system. And, they don't have an exact date. And, obviously by the end of the year, I think the Chinese are planning on having a gold fix price in yuan or RMB. So, they're laying all these foundations in place step by step. And, it's not going to happen overnight. It takes time to lay all these different programs in place, because setting up the global financial system with the U.S. in power after Bretton Woods, it took a long time.
Yeah, and these are also political relationships, too, and it's important to keep that in mind because, the United States has an exorbitant privilege, as it is often called. Having the reserve currency enables the United States to basically electronically print currency or expand our credit markets and our bond markets such that we're able to procure goods and services around the world with our trade from fiat that's created out of thin air. And having one country with this exorbitant privilege is something that China doesn't want. It's the whole BRICS movement has been predicated on diversifying away the excessive control that the United States, first and foremost, but Western nations overall have over the global economy. They want their bigger slice of the pie, and that's what this currency and banking system evolution is about when it comes to what China's doing.
Well, in terms of global GDP, Eric, the other countries besides the U.S. and Europe and Japan do have a bigger slice of the pie from in terms of a few decades ago.
Yeah.
So we've seen them go. The rest of the world, not counting the big couple of economies, the U.S., Europe, and Japan, they've gone from maybe 30% of global GDP, I think, in the 60s and 70s to 60, 65% now, depending upon whose estimates you're looking at. So that's a massive amount of growth. And yet, the financial system, like you said, the U.S. is still running things. They don't have as much of a voice at the IMF and in the G20 and in things like that. So this is just a reaction, like you said, to saying, you know what, the political system, you guys politically are not going to give us votes and things like that. Fine, we'll set up a new system then, and we'll start doing trading and reserves and stuff in this next system.
Yeah, and when the Bretton Woods institutions were set up, the United States had 65% of the global economy, and now it's at around 17, 18%.
Well,
so huge.
There was a reason for that. The U.S. didn't have all their factories bombed. It was they had all their industrial base intact. I mean, Japan was bombed out. Most of Europe had 2 world wars, and most of Europe was totally bombed out. The First World War, most of Europe didn't fully recover from that. There was still lost generation, and they all their factories hadn't been rebuilt. Well, Germany had some of their factories, but there was still a lot of decrepit, unfinished buildings and things after the First World War, and then they had a Second World War within not too long after that. So, I mean, 2 world wars in 30-something years apart from each other, that's a massive amount of damage for your industrial base when there's been bombings and things. Yeah, so the U.S. had a tremendous advantage for a couple decades because of that. But, I would say I would make an argument that the U.S. doesn't have an advantage like that. Now, the U.S. does have some industries where they have an advantage in, but they don't have nearly as much of a gap as a head start of almost every other country that they did in the past. Okay, well, I have a few more stories before we get to our Scumbag of the Week nominee sections. One of them is just about the stock market rally. So I did a stock market video on our Wall Street for Main Street channel 3 weeks or a month ago, and I showed the cliff diving on the chart. Well, now we've started to have rallying in the chart. So I'm looking at the SPY index, which is the Spider S&P 500 ETF, or SPY, and that tracks the S&P 500. And after we had that major cliff dive around the end of August, we've started to have a bear market rally here fighting. So obviously, people are starting to paint the tape. There's value investors that still believe the economic statistics in the U.S. and they bought the dip. But, we're starting to have an attempt at a bear market rally here, but, it's not on rising volume it's not on massively higher volume like the original cliff dive was in late August. So it looks to me like, this is just a bear market, a little tiny rally within a bear market that we've started. And, there's going to be some pain, obviously, because we're starting to see earnings come out with companies, and a lot of them are just not very good at this point. For whatever reason. I mean, we had seen signs of this the last couple of quarters. So we're seeing signs, with the jobs report. I mean, even with the birth death model, Eric, the last jobs report was not very good. And people are starting to question the stock market valuation when we're seeing evidence that, even with the doctored statistics, the economy doesn't look very good. Why do I own valuations of these stocks why do I own stocks at these valuations then? Yeah.
The job report 2 weeks ago was a seminal event, and also just the fact that, we closed out the September quarter, the third quarter. We often see a lot of big moves in the marketplace on the end of quarters now that we have such a leveraged financial system. And, come October, we had a switch in sentiment, and we had a lot of short covering the last 2 weeks as well, too, because people were getting really, really bearish going through August and into September when, all of the turmoil in our marketplace is going on as well, too, when we're talking about the reverse repo action back in August, September as well. We've gotten this short-term reprieve where the powers that be basically are doing their job owning, and now we're in the mode of, okay, expectations for the interest rate normalization cycle is now pushed back further out in time into 2016, and frankly, it's going to be interesting whether or not the Fed is ever able to raise interest rates. I have a feeling that things might actually fall apart and crash before they even get far in that regard.
Yeah, they can never raise them meaningfully until the system collapses, in my opinion. But one of my friends thinks that they'll do a token raise in the next, 6 to 8 months or something like that, just to get money out of the stock market and other things into the treasury market so they can buy themselves another 6 months or a year and move gold and silver prices down. I don't know. That's Lewis from Small Gold, SMAULGLD.com. I don't know if that's actually going to happen. I mean, ideally they wanted to do that already, but the economy is just so weak, and look at evidence that Deutsche Bank and Glencore and developing world is falling apart, and we've have, full commodities bust now in so many different commodities. I don't know if they're going to be willing to risk that repercussions of that at this point.
Yeah, and when you think about it, I mean, first of all, this kind of thinking in terms of a strategy option is something that's done. I mean, they literally do think about these kind of things, and that just goes to show how insane the market is. I mean,
well, you do that when you're desperate, then,
exactly.
right? When you have no choice, you'd be like, well, you know what? We have to save the bond market because the government can't collapse, so we'll let the stock market crash, and we'll buy ourselves another 6 months. This is something someone truly desperate only thinks about, I guess.
Yeah, and basically the Federal Reserve has to have one way or another of creating the liquidity necessary to support the bond market and issuing new bonds to support the government. And the organic demand for the bond market is dried up. Not 100%, obviously. I don't want to exaggerate, but the fact is that the interest, even from pension funds, I mean, they're scrambling around in this zero interest rate environment, wondering what the heck they're going to do for their long-term obligations, and they're moving more monies into stocks and alternative assets and whatnot. I mean, the organic buyers that you typically would associate as the first in line for the bond market are not even, fine enough to buy bonds as much as they were before. Never mind the Chinese selling bonds and international demand being curtailed to some extent by the decline in the price of oil, such that even Norway is now talking about using some of their assets that are, amongst other things, U.S. stocks that they're going to sell to fund their budget. I mean, the pressure across the board in the bond market is such that it's not the same market as it was 10 years ago. And this is also another example of the financialization process reaching its apex, because we have a fiat system where the system has to be sustained by ever-increasing levels of new fiat being generated to support the fractional reserve system, the interest payments due on existing debt, on and on. I mean, it's not an organic system that can sustain itself.
Exactly. It's a perpetual motion machine that they fooled everyone into believing. And to add to your point there, Norway is taking out money, I guess, but we're also seeing both Saudi Arabia and the OPEC countries, whether it's their sovereign wealth funds or hedge funds that they backed with capital here in the United States or London, that they've ordered redemptions in those, and they've taken out over $50 billion that were in capital markets and other markets. So they were ordered to sell and create liquidity because these oil governments, need to raise cash to protect their own governments from potentially toppling. So we're starting to see the really big players and pull money out of the markets now, and we're seeing evidence of some of these players like Stanley Druckenmiller, who is George Soros' top money manager for a while. He's buying gold for the first time, I guess, and we're starting to see people buy gold. And, also what really surprised me was that, when China was dumping all these bonds, the interest rates didn't spike. So we're seeing just massive interventions and weird behavior across the board. I think, this bear market rally we do have in the general stock market, Eric, individual stocks are still going down. Look at the biotech indices and things like that. But it looks to me like they're trying to keep the main indices higher to fool people, and whether that's, buying the S&P 500 E-mini futures contracts or painting the tape on, these general stock market indices for the Dow and the S&P 500 and things like that. They're going to do what they have to do to maintain things that make the status quo look like it's fairly healthy. So people don't go into a panic and put all their money into gold and silver. And I think that's where, part of the propaganda machine, that's where these gold as a pet rock things come out. I mean, right when that story came out, that's around when gold started to move higher, I think. I think that was, as Sir John Templeton would say, around the point of maximum pessimism.
Yeah, and maximum propagandization. That July through late August period is when the system was creaking, and then all of a sudden in August we went down, 200 points. Excuse me, like 2,000 points on the Dow. So, the level of negative sentiment in the precious metal space, probably 2 times this year, was never exceeded. I mean, August as well as December, January. We have seen sentiment that is quite exceptional in precious metals, and that's when you want to buy. The blood is definitely running in the streets.
I agree. And among the miners too. And we are starting to see evidence that people are starting to buy, the larger money managers, the asset allocators. They are starting to build positions in gold and silver stocks. And I'll tell you guys how I know this. And this is because on days, even when the gold and silver price, the paper gold and silver price is not up, we're seeing the gold and silver stocks be bought. They're starting to get a bid. And what that means to me is that money is rotating out of general stocks and other indices and things like that, and it's starting to rotate into gold. Now, smart money managers do not put all of their money at once into a position. So they're building a position. And so on days when you see the gold and silver price go down, but gold and silver stocks go up, that means hedge fund managers, investment banks, rich individual family offices, billionaires, and things like that, they're starting to build their positions in gold and silver stocks. We can't get data on whether or not they're buying physical metal because they don't have to disclose that, but we can see their trading activity with the stocks, and that's what you see on evidence of the tape of the stocks. The price tape is when gold and silver prices are not rising, and you see evidence of the price of the stocks going up, then someone is starting to buy. There's more buying pressure in these shares, and I think that's what's happening. Is money is rotating out of the general stocks and biotechs and crazier, more risky things that in a good economy would do well, and you're starting to see these things move into defensive positions, which is what I consider gold and silver stocks. I consider them part of a defensive portfolio against turmoil, inflation, deflation. During a deflationary environment, Eric, actually from after the 1929 crash, gold stocks actually started to hold up pretty well because people were panicking and things like that. And after FDR devalued in 33, they did very well. So there's historical evidence that as things get worse and worse, maybe they'll go down a little bit. But the gold stocks have had a big bust for the last 4 years. And, the sentiment's so low, I don't think there's that many more sellers.
Yeah. Homestake mining on the New York Stock Exchange in the 1930s went up by about 800%. I mean, during the Great Depression, they would gold.
With increased dividends, too.
Yeah.
With increased dividends, too, along the way.
Yeah.
So I don't know if dividends are included in that overall increase there. That's a great point, though. We have a couple more stories I wanted to talk about before we get to our Scumbag of the Week nominees.
Well, before we leave gold, before we leave gold, I just want to point out a couple of other things, too. I mean, it's very typical for the miners to lead the bullion. 80% of the time, in fact, we typically see the smart money move into the stocks first. And earlier this year, in January, we saw something like $500 million or whatnot fly into GLD when it came to the reporting of the inventory that the GLD ETF holds of gold bars. I mean, obviously there's a lot of open questions as to what goes on, and we've talked about that before, and others have talked about it today, so we don't really need to address it. But the bottom line, though, is that even though we see interest by people looking for safe havens and alternative assets to move their monies in, it's still a very small flow, and it's early days. The vast majority of the conventional thinkers on Wall Street still don't look at gold and silver as ways of protecting themselves. They'd rather do other types of alternative assets. So we see some noteworthy high-profile people like Druckenmiller and others moving into gold, but the reality is that for the most part, the lion's share of the conventional financial Wall Street and City of London community, I mean, these people don't really understand how to even invest in gold per se. They
hate gold.
GLD as gold, and it frankly isn't.
Yeah, they're if they do buy gold, like you said, they're weak hands. So they either hate gold on principle, or they hate what gold stands for, or they hate gold because they were taught by their Keynesian economics professor at Harvard or Princeton or Yale that gold is very bad, and it means the economy is bad, and you can't get any dividends or interest on it. But in times of financial repression, when there's NERP, right, or ZERP or whatever, gold's gonna do pretty well, rather than keeping your money in a bank account and being charged negative interest rates to hold the money there. Yeah. Gold is a pretty good alternative for that. There's one other thing on the gold market that I think we should bring up, and this story just came out recently. Bloomberg actually reported it. We'll put a link in our section later, in our show notes. 3 small high-frequency traders were banned by the exchanges for spoofing and manipulating the paper gold and silver markets.
Yeah, monstrous fines of 100,000 and 28 or 2,000. Yeah, I mean, just all these small fry cases are what the system deals with when it comes to trying to say, oh, we're cleaning our house. Yeah, right. And that was it Nick Gleason? I'm trying to remember the gentleman who was in his 30s who got busted for the LIBOR scandal. I mean, you were talking about trillions of dollars worth of malfeasance going on, and you find some guy in his underwear to bust in his basement.
Well, Leeson wasn't LIBOR. Leeson was actually about 12 years ago. I think he was during the Asian tiger crisis.
Yeah, right, sorry.
But yeah, it was derivative trading and forex and things. Yeah, but different scapegoat though. I know what you mean. I mean, obviously his bosses had to sign off on some of his trades, and they had to know that these trades were bad. There's no way he could have hided that much losses. I think it was Barings Bank, which is the competition with like Rothschild's Bank, the second most oldest and most respected investment bank in London or something. That's the one that went bust. Yeah, I think. Yeah, so I mean the main takeaway from this story, Eric, at least to me, is that the bullion banks and the investment banks and the hedge funds, I mean, they run these high frequency trading programs that do the same thing as these little guys. They do it even better, actually. The little guys are probably mostly just piggybacking the trades the other guys do, that blow out stops and paint the tape and things like that. And no one, oh look, we threw three guilty people at you. Now you have to stop questioning the integrity of this market.
Yeah.
Unbelievable. I mean, and it was good that Bloomberg reported the story, but I haven't seen a lot of other people talk about it yet. But it's 3 small guys that were busted when hundreds, if not more, of people from larger firms do it all the time every day. Okay, my last couple stories before the main segment for Scumbag of the Week nominees. The U.S. intentionally bombs Doctors Without Borders building that they knew the building was there in Afghanistan. And then they offered to give the families of the victims just a cash settlement. I can't blame the Doctors Without Borders and the families for wanting an independent investigation that's not from the U.S. to look into this. I think that's the right thing to do for them to ask. I don't know if they're going to actually get it. It's just sad on so many levels. It's just sad on some. I mean, the money won't replace the loved ones, no matter how much.
Admittedly, I haven't had a chance to dig deep into the story, but what is interesting about this, and just for background for people, when you have operations like this, and this building in and of itself is larger than a football field. I mean, typically in war zones, fixed medical operations of this scale are known on all sides. All combatant generals and so forth, leadership structure, they're aware of these kind of assets. So part of the reason why there's so much backlash against this is that it's most likely the case, and again, I haven't done a lot of deep research on this yet, but it's most likely the case that the U.S. government and the military command knew that this was here, and that
they did know. They built the building.
Well, yeah,
it was on all their maps.
Yeah, I mean, whether it's an operation and currently serving as a medical institution or not is the key issue. So
I think the bombs just missed. I think the bombs missed their targets because they were trying to aim for something else, and they built the medical buildings. They knew, so it was a total snafu. Maybe it was done intentionally. I don't know. I don't know why it was done, but it was done, and there was very little remorse for it. Here's a small check. I don't know exactly the settlement offer, but even if it was $1 million per victim, it's still not enough. You're not going to replace your loved ones. It's just very unfortunate.
I mean, back in the Yugoslavian conflict, in Belgrade, the embassy that China was running was involved with signals intelligence, and the United States blew up the embassy, or they bombed it. And it's interesting to look back on that as an example and compare it to what's going on here. It makes you wonder whether or not there may have been some intelligence within the U.S. military that something was going on there supporting terrorists or whatever. Who knows? I mean, it's conceivable that that may explain part of the justification for what the U.S. did, and that it wasn't an accident, but more time needs to pass before we can really figure out what the hell happened here.
Yeah, it's just frustrating. I don't know if people are ever going to find out the truth, but you would have thunk that that the U.S. government would have given Doctors Without Borders a warning that they would ask them point blank, are you guys helping out? Are you guys helping the people, our enemies, or something like that? I don't think there was any warning like that. They just bombed them. So. The other stories I have are Edward Snowden. More documents are coming out from Edward Snowden, and he's on Twitter now. You can follow him at Snowden. So you should take a look there. He's going to be releasing more information there. I think he's well over 1 million followers now. Quickly, he joined a couple weeks ago. He reveals the UK is spying now worse than the NSA on people. So I mean, they're seriously challenging First Amendment rights in the United Kingdom for people, and they can publicly censor you and all this other stuff. It's getting pretty bad in so many countries, whether it's China or the UK. I mean, the US, people think the NSA is the worst, but other countries, are just as bad, if not worse. It's unbelievable.
The UK and the United States have always had a very high-level relationship when it came to parsing and distributing intelligence, gathering intelligence. I mean, the Snowden revelations are interesting in the sense that you brought a lot more granularity and detail in terms of what goes on in the signals intelligence abuses, but the reality is that a lot of what he brought to market, or brought to the understanding of people, has already been known for decades. I mean, the UK and the United States and Australia and Japan and probably a couple other countries, and I forget Israel, they have formal relationships when it comes to the NSA and exchanging of information. And even before 9/11, the United States for decades was using British installations to spy on American conversations that were happening abroad, and using the British relationship as a way of saying, well, the NSA isn't collecting that information, the British are doing it, so it's not illegal.
Yeah, it's just so frustrating. I think the U.S. obviously has more libertarians and more people are whistleblowers or activists or watchdog groups, right, that are alerting the general population to what is going on in the U.S. I don't think the U.K. has as many libertarian people saying, hey, this is wrong and things like that. It's starting to grow. Obviously you have Nigel Farage, right? The Independent Party, UKIP there, but I don't think they have as much followers as Ron Paul do in the United States on a percentage basis. I think a lot of the people in England, they think, oh, for security, it's fine or something like that, or, oh, I don't have anything to hide. But, when the rules change, Eric, what's bad and what's criminal and stuff, if the rules change, a lot of more people are going to be viewed as criminals or thought crime. This is Orwellian. This is getting to 1984 where, if you type something on social media and the government has, a troll there watching, it's a thought crime now. So it's getting to crazy levels now where you got to be, our listeners out there should be very careful what you put on social media. Any comments, if you're overly emotional, there was that play in baseball where the Chase Utley slide and where the Chase Utley slid, and it was a very hard slide. And, I don't think he was trying to break the shortstop's leg, Ruben Tejada's leg of the Mets. And I played a lot of baseball. You're supposed to do hard takeout slides like that as long as you can touch the base. But, on Twitter, Eric, I was seeing death threats. I Twittered Chase Utley. I searched Chase Utley injury on Twitter. And from Mets fans, I must have seen 100. I was scrolling through, and I must have seen just on the first page, like dozens of death threats. I mean, these people, they have their names and stuff. You can't put this stuff on social media. You don't know if you're going to get in trouble. I know it's passionate. You're heating the moment. You love your team. You got to be very careful because now it's out there permanently, maybe. It's very dangerous.
It makes me laugh thinking about, all the various stories I've seen of robbers showing all the bling that they've ripped off on their YouTube channel or whatever. It's like, oh, by the way, I live on 1414 Mockingbird Lane. Cops, come on over and check it out. I want to show you.
Well, the other side of that coin, Eric, is really funny is people, I see this all the time too, people post on Facebook when they're going on vacation. Yeah, and they might not have the security measures. So you're basically inviting thieves because people can search your statuses or things like that. You're inviting thieves to try to figure out how to rob you. So
right.
be very careful about telling people when you're going on vacation on social media and things like that too. It's, I mean, we live in a world, obviously I used to hear stories when my parents were growing up, how like parents left their kids outside to play and they could walk down a couple blocks to go get ice cream for 10 cents or a quarter or something like that. We don't live in that society anymore. We live in a very immoral society now where people, they're either on medication or they're angry at the world or angry at women or angry at, some type of group, and it's some type of minority group or something. It's really sad that things have come to this level. People have to be almost paranoid and scared to interact with people now.
Then you get the parents who are reporting on the parents let their kids walk 5 blocks outside unsupervised, left in a park or whatever. The excesses of the nanny state.
There's a big, to add to your point there, Eric. Here I live around Tyson's Corner in Virginia, and there's an elementary school, Franklin Sherman, I think, in McLean, Virginia, which is not too far from where I live, and there's a gun shop that complies with every single state and federal law. It's Nova Firearms. There's the local news is making a big deal out of this. They're a block or two behind the school, right? No shooting ranges. They comply with every single law. And the parents of the kids at the school, there's protesters every single day now trying to get the shop moved or shut down. So, I mean, and this is in the state of Virginia where it's considered fairly pro-gun rights. So we have people, trying to, just for social reasons and stuff, they're trying to blame the shootings on a gun store that does background checks and fully complies with every law. It's getting absurd. It's kind of off tangent there. I mean, like, the gun shooting, obviously it's a very hot debate at schools, but I mean, these guys, a lot of them are young adult males who don't have a good job, have little or no money, can't find good work. They're angry at the world. They can't get laid. And, they're on medications in a lot of cases. They're depressed. So you add up all these factors and, they're looking to go on a shooting spree, unfortunately, where there's no armed people there. So these gun-free zones, almost all the shootings, Eric, in the United States are gun-free zones. That you don't see these shootings occur where there's people, armed security guards and things like that. You rarely see them there.
And the pharmacopoeia marinating the brains of these people, I mean, I think it's almost like 95% of the case history of mass shootings involve people who have been on medication of one form or another.
Yeah, I agree. It's a combination of factors, though, because, I mean, a lot of these guys are young adult males, either in college or right out, and, they don't have a good job because the economy's bad. Maybe they tried to get some skills and things went bad, and, they're not getting laid. I can guarantee you if they had a good job and more money in their pocket and they were getting laid, they wouldn't be thinking about going on a shooting rampage, okay? Maybe a couple of them would, but it would diminish drastically. So these are symptoms then of, an immoral society and a bad economy and things like that. And the people who just want to take away all the guns, it really scares me. I don't think they understand history at all with what happens to societies when they can't protect themselves against unjust governments.
Yeah, I mean, from the 1950s and further back in time, there was no such thing as mass shootings in schools, yet, particularly in rural communities, kids would bring guns to school all the time and go hunting afterwards or target shooting. I mean, even, schools had shooting instructions as part of their physical education curriculum. This whole modern phenomenon of mass shootings is definitely got everything to do with just the devolution of our society and the economy, as you know, and the drugs that people are on, and just, this is a modern phenomenon. It didn't exist.
Yeah, and you have video. Yeah, and you have video games now and TV and movies and things like that where they show people killing lots of people. So I know, these are fantasy things, but young impressionable minds, teenage minds or college minds, I mean, if things are bad, they want attention and things like that. So it's just very sad. There's a lot of factors involved, but I mean, taking away everyone's guns, it's not going to solve it. It's just going to give the government more power to implement, all the rules and things like that, where more taxes and things like that going forward. One more story before we're seeing Silver Eagle premiums, I think, drop slightly. So maybe the bottlenecks and the shortages are abating. I don't want to spend a lot of time on that because we have so much good coverage in the alternative space about gold and silver and the premiums and things. But one thing I did notice, Eric, I went to a technology conference for a day for a couple hours in Washington, D.C., last week with Modawood, and there was a good amount of startups there, like 150 or so. And I'm starting to see startups now that are securitizing student loans. So we're seeing a situation now where a student applies for a crowdfunding or from a group of investors, and he lists his GPA, his major, his accomplishments, things like that. So the individual student is doing that, and he can borrow less money if he gets funding in these types of new crowdfunding student companies. But the scary part to me is that these things are being chopped up, these loans, into products people can invest in, into tranches. And maybe in a free market, there is a place for this on a small scale, but I'm worried that Wall Street will pick up on this because, when Prosper and Lending Club started, they were very small. And then the hedge fund managers on Wall Street saw, hey, this is a good idea. Hey, we're going to, leverage these businesses up and make them enormous markets. We could see a situation here where the student loan debt is securitized into subprime tranche levels and different tranche levels. So it's starting to get to scary propositions here for me that, this could be the next derivatives bubble we could see expand and then implode.
I'm trying to wrap my brain around how far along that process is. I mean, we've got student loan debt well over $1 trillion in the United States. So it's definitely...
Well, maybe it can go another couple trillion more before it collapses. I don't know. This guy I met, and he seemed like a really guy. He really wanted to help kids who had good majors and good degrees from good schools who are hard workers. He wanted them to be able to borrow much cheaper interest rates, half the amount of borrowing cheaply. And I'm in favor of that, at a small level. But what scares me is Wall Street's going to catch on to this, and hedge funds and stuff, and they're going to start drastically scaling this business way too quickly, which is what happened, in the housing market and other things. And we're starting to see this, and I think subprime auto, that's being securitized too. So it's just amazing, the financialization of so many different things. I would love to see students be able to borrow cheaply, but it scares me that this thing could turn into a new type of derivatives bubble going forward. And so these are not there were two startups at the conference. There was like 150 companies that came into the Washington, D.C. area to present, but I'm sure there's a lot more than that are doing the idea.
It's interesting. I mean, one of the big problems with the educational system in the United States, the higher educational system, actually you can say the same thing to some extent for private schools too, but, we have dumped so much money into the university systems that tuitions have gone berserk, and we have like 11, 12% year-over-year increase in tuition over the last 30 years.
Credit bubble, yeah, government backstop credit bubble, right?
Exactly.
So
and
the cost
to disintermediate and further expand the financing to increase that bubble. I mean, I don't know. I mean, what could go wrong there?
Yeah, I mean, this securitization stuff that he was telling me, like, I don't think this guy had been involved in the financial world prior to 2008, but it sounded almost exactly like what Wall Street did to the housing market with chopping things up in tranches. Well, talking about tranches and rate of return and risk and all this. And I was like, maybe on a tiny level in a free market, if someone has savings and they're not getting any interest rates due to financial repression and NERP and ZERP and all these other stupid policies the Keynesians and the people in power want, okay. But what worries me is, this thing could be scaled up to a level where, things are blowing up again because hedge funds bought them or investment banks were holding the bag on these things. So I hope to God that I'm wrong. But I think, given Wall Street's history, they're going to see this as a new market that they can scale from, 1 trillion or something to a couple trillion. And, it'll be enormous disaster in the future, enormous bust. Even larger maybe than the bust that we may already have. But, the government giving credit bubble, all this easy credit out, it's caused enormous expansion and construction of student buildings. I've seen Virginia Tech and George Washington University just continually buy more properties all over the D.C. metro area. So they're, with all this extra money that they make in endowment funds and stuff, they're buying more land and building more buildings and things like that. It's just I'm in educational technology. As you know, we have a startup, Wall Street for Main Street is an educational technology type of company. And, we researched the textbook market. The textbook prices, Eric, are perpetually increased basically every year. The textbook market is up over 1,000% in price for a textbook in the last couple decades. Tuition is up over 500%. since the 1970s. This is not sustainable for a vertical chart like that for prices to go parabolic. Students cannot afford this debt, especially when they're not getting jobs, good jobs.
And dumping more money into the system is not going to fix it, and that's what is really the bottom line here. I mean, the educational system's inflation has been a product of oligopolies like the textbook market, perfect example. And when you have that amount of money flowing into it, you get huge inflation and great inefficiencies. And our educational system is declining in its function. I mean, the quality of education has taken a huge hit in addition to the tuitions going sky high.
Agreed. The professors, a lot of them, if the real professor actually teaches the class or he just dumps it on his graduate assistant, they just read the textbook now. A lot of them, like I was in MBA classes for a year at a Virginia Tech satellite campus closer to Washington, D.C. in Northern Virginia, and, tuition was high, and I had advanced business school professors. They would take the bus to school because one of them bought a house on subprime, and he was a central banker at a central bank in Africa. And, these guys were just reading from the books. I would ask them questions, and they wouldn't know them. They would have to, I have to check the book later and let you know. It was like, well, why am I paying for this education? Why am I paying, $500 or $1,000 per class then, plus, $100 or $200 for this book, when you can't tell me things that'll help me learn? It's just rote memorization. It's not worth the bang for it. Drastically needs disruption and efficiency, and the prices have to get lower.
Yeah, and you probably embarrassed your professor and he gave you a C, right?
I don't fully remember. I think I got a B in one of those classes, but I may have dropped out by that point. I had taken enough of those classes after a while, and I was reading books, and I was so eager to be an entrepreneur that I just couldn't really stand it that much. I love learning the classroom model, sitting in the classroom and all this stupid homework and rote memorization, and you get chastised for raising your hand and asking, halfway decent questions. I can't help you with that now. Yeah. And your other students look at you like, you're a leper when you raise your hand in class. I didn't like that environment. I love to learn, like I said, although at that time, before when I was in undergrad and college, I didn't love to learn that much. I was kind of lazy and partied a lot, but now I love to learn. I found the passion again through learning other things. It's just an inefficient system, and the old paradigm. Just remember the point I wanted to make. The old paradigm, is what the central planners and the college industrial complex wanted. Is you go to school, you work hard, you get a good job, you get a pension, you get good grades at school, you get a good job, you get a pension, and then you can retire. I mean that model for the most part, Eric, is dead. Even if you're a great employee, you're a great lawyer, you can still get fired because you're making too much money. So, I mean, we're in a tough world out there because of globalization and innovation in the internet and other web-based businesses and things like that. The old paradigm shift from central planners where, if you got a good degree in college, you're guaranteed a good life and a good job for the rest of your career. Those days are numbered. I think the new statistics now they're expecting the millennials through their adult lifetime to have maybe 10 jobs in their adult lifetime, whereas the last generation, the baby boomers, had 2 or 3. And it was, my parents, when they talk about anyone getting fired or anything, or they hear that, it's like a death sentence, but now it's like normal. People get fired. So I'm done with that rant.
Yeah, and let's go pick on some scumbags.
Now, Eric, you have a scumbag, and it's someone that we're all familiar with. He has a new book out, Uncle Ben. Tell our listeners about the new book and the things he's talking about in there.
Yeah, it's called Courage to Act is the subtitle. I mean, people in the precious metals community are joking around saying courage to print. And, what did Bernanke do? I mean, basically he used the standard operating procedures and new ones of increasing liquidity to the system so that the banking system is floated, or at least for the time being, as we think about Deutsche Bank and begin to wonder what's going on over there. I mean, that's really the bottom line, and we have not if anything, we've actually made the system worse when it comes to regulations and Dodd-Frank and the rigmarole that CEOs have to go through in terms of compliance and whatnot that don't address the actual problems that caused the financial system's crash in the first place. We have too much leverage in the system. The division that separated the financial marketplace from investment banking and commercial banking since the Glass-Steagall Act was put in place following the stock market crash in 1929 is served a very important purpose in keeping leverage within the system checked by default, because business lines were not expanding in the banking system to incorporate derivative positions to the tune of over $2 quadrillion in notional value. I mean, the level of leverage in the system now is off the charts, and the incentive systems for too big to fail and banking managers who are too big to prosecute, it has created a system that cannot be fixed. And the only way that the system can be fixed is after a crash. And so now we have the maestro take two of Bernanke out with his courage to act and trying to resuscitate his reputation. And he's following along now that he's out and talking on the circuit about issues in the financial system. And the bottom line is that the system has never been fixed, and we're just cruising along, and at some point we're going to have an accident.
Yep, zombie system. What I've heard about the book, I haven't read it, is that Bernanke says that more bankers should have been jailed during the crisis, but he should also be jailed. So he's like the pot calling the kettle black. I mean, he's definitely guilty of so many bad things. Keynesian economics in general, the solution is lowering interest rates and creating more liquidity. It's based off mercantilism and printing more money. And Keynes also believed in a lot of the stuff Marx believed in. If you don't believe me, go and read the Rothbard's biography of Keynes, Keynes the Man, or go and read Henry Hazlitt's book about Keynes, Failure of the New Economics, and see the similarities where they go through and talk about how Keynes, agreed with Marx on a lot of stuff.
Yeah, I haven't seen a lot of speculation about the statutes of limitation having expired for people like Bernanke and other bankers that he speaks about having, needing to be thrown in jail for their transgressions and whatnot. So isn't it nice that he puts out a book now?
Well, he puts out the book now, so maybe he can, instead of $250,000 a dinner or speaking fee, now he can charge $300,000 or $500,000 maybe. And he's got tenure again, right? He's back at the university, so he has a comfy job, tenure. He's got his Federal Reserve pension. He's getting his professor pension, his retirement plan. So, he's financially secure where he can come out and say some stuff about the system. And we've seen this in the past with, retired central bankers. We've heard this from retired central bankers in China and ones in England and things like that, saying, that the system needs to go back to gold and we need to drastically reduce the amount of leverage in the system. Even we've seen Paul Volcker say this to a certain extent too. But, these guys aren't on the payroll anymore. So the guys on the payroll are going to say one thing, and the ones who are retired and have their financial situations more secure can't be fired. They're going to go and say this. They're going to go and tell more of the truth, I guess. Okay, well, we'll move on to the next few stories here. We've been doing this long, a lot of good rants today. Okay, so we have the UK Royal Air Force given the green light to shoot down Russian jets in Syria. This is just an amazing story for me. This is almost an attempt to start World War III, it sounds like to me.
Well, I mean, we should also say that this has been denied since the story came out with International Business Times and two tabloid papers in the UK. The Royal Air Force basically said, we never issued these rules of engagement changes. But the reality is that it probably was an actual change in the rules of engagement. And it's not like they're formally saying, okay, if you come under any kind of suspicion of threats that you would go out and attack a Russian jet. They just are, saying that if there's a situation where if for whatever reason you come under fire or what have you, that you can defend yourself. So, from the technical point of view in a war fighting scenario, something like that can make a lot of sense. And people are looking at it and saying, well, okay, shouldn't they have this authority in terms of their rules of engagement. But the thing is that in a fog of war, these rules of engagement serve as brakes to slow decision-making such that accidents are less likely to happen. And that's the significance of a change like this. When, whether or not, you want to speculate that the UK Air Force is interested in actually having a skirmish that can be used as a false flag or whatever is speculative. We don't know where they're coming from. But we certainly know that this is bad military decision-making. These breaks, these systems are set up to have rules of engagement to prevent accidents from happening. And the fact that the British would be so stupid as to do something like this when it's not necessary. I mean, there has been zero indication from Russia in any way, shape, or form that there was some kind of a threat. So that's the real issue here, is that the UK is doing something in absence of a threat, and it's a continuation of an escalation of belligerence against Russia, whether you have sanctions, which are a formal act of war, or launching of safe zones and the discussion of a no-fly zone being created in Syria to protect the so-called moderate rebels that the CIA and the Pentagon have been investing lots of money and material to fight and overthrow the Assad regime. I mean, these are the kind of things that represent escalations and are dangerous.
It scares the crap out of me, Eric. I mean, you and me were discussing this privately a couple days ago before we recorded, and I was like, well, this could start World War III potentially if there was Russian jets blown up. And you said, well, there's 101 different things that could start World War III. So that scared me too.
Whenever you have proxy wars, regional wars, skirmishes, every time you add a new conflict, you're multiplying at an exponential rate. There are probabilities for accidents and unforeseen consequences of war, the fog of war, creating escalation.
And it would make, and to add to your point there, it would make sense that the U.S. would want to start a war. Well, the neocons always in the D.C. area always want to start a war, but as we see the economic data going worse, right? Nothing's more distracting than a war, right? So.
Yeah. The system is set up for low-grade war on an ongoing basis as part of the cost of doing business, or as part of business. It's a warfare welfare state.
Yeah, the military-industrial complex, they need to get those profits up. They need to beat the Wall Street analysts' expectations. It's time to, tell the politicians that, we need to figure out somewhere else to bomb or attack or something.
Yeah, well, a lot of people hear stuff like that and they think, oh, come on, you guys think conspiracy theorists and whatnot. But in the grander scheme of things, the overall mechanism of the international economy under the dominance of the Anglo-American Empire has a military dimension that enables its existence. And it's a balance of power relationship dynamic amongst all the nations of the world. And so when we've had China rise as a growing power, and the friction and conflicts that come from that in this system, we see competition rising. And so it isn't that surprising to see the effort to try to pull Ukraine into the European NATO sphere of influence, or to try to rework the map of the Middle East, where Libya, Syria, Iraq, eventually Iran, per the hopes and dreams of the neocons and so forth. I mean, we had that example of General Wesley Clark speaking to Amy Goodman of Democracy Now!, talking about how he relayed the story of learning about a year after September 11th. People in the Pentagon were telling him, and he had retired at that point, he was just a civilian with his context amongst other generals and policy planners, saying that they were planning on overthrowing 7 countries in the Middle East and reworking the entire map of the Middle East. And all of these things are part and parcel of securing the interests of the way the economic system is set up.
The cost of empire.
Yeah. And we are definitely seeing shifts in the overall balance of power. We're moving back towards the direction of a multipolar world as opposed to a unipolar world when the Berlin Wall fell and the end of history, and Francis Fukuyama and other, intellectual scholars within the international relations community.
Oh yeah, I had to read that. I had to read that garbage book in a political science class undergrad.
Yeah. And so, think back to times of previous world wars, where World War II was following the Great Depression and all of the turmoil and changes and so forth, and the competition that was going on the international stage, and it ended up creating the fertile soil for great turmoil of ideologies competing against each other in war, in World War II. And the backdrop of China rising and Russia being framed as an enemy as opposed to a potential partner as a European nation.
Yeah, Russia's being framed as an enemy. Look at the political debates, right? The Republican presidential debates have been like, what would you do to Putin, right? So that's like one of the main questions.
Too. I mean, the level of militancy amongst the Republican candidates is just absurd. I mean, to some extent, Donald Trump and Rand Paul are probably more in the direction of sober-minded thinking when it comes to international relations. But the other candidates in the debates have been like, Paolo Fiorini is talking about bringing more nuclear weapons to Germany and doing exercises on the border of Russia. And I mean, and then outside of the candidates, you have people like John McCain running around talking about, we need to shoot down Russian jets. Let's do some inflammatory actions now.
Yeah, but John McCain's friends with his ISIS buddies, right? He's been taking pictures, so they're killing his friends.
Yeah.
Oh man, Mr. Corrupt himself, John McCain. He's a stooge for the military-industrial complex.
About 2 years ago, he was talking about resigning, and unfortunately changed his mind. Or not resigning, but not running for re-election, I should say.
I'm surprised he hasn't resigned from being congressman, because he can make even more money as a lobbyist. I mean, working on K Street, his salary would go to like $5 million a year, get all these extra perks. That's why we see,
he married into a huge wealthy family. He cares more about power. He's not. He doesn't need
okay. Yeah,
he's
that's true.
Egomaniac power monger.
Okay, well let's move. Speaking of power monger, news story this week broke. The CIA actually admitted there was a cover-up in the CIA of the JFK assassination. So the CIA director at the time was involved in it. They actually released that. I was somewhat shocked.
I saw the headline on that, and I haven't read it yet, so I can't really comment on it. But what I can say with a high degree of confidence is that it probably is a limited hangout story of one form or another, and whatever they're admitting to is not the full truth, obviously.
I'm sure they're not. Now, is the Warren Commission, the microfilm and things like that, are the Warren Commission results? They were when the Warren Commission was done, it was supposed to be released 50 years later. Are we coming up on that date soon when it's supposed to be released?
Well, you're referring to the files, not the Warren Commission. The 26 volumes of the Warren Commission were published, but in the process of their investigation on grounds of national security, they said the files would be locked up till 2050, if memory serves.
Yeah.
When Oliver Stone released the movie JFK, I think it was in 1990 or 92, maybe 90, there was a statement at the end of the movie when they were rolling the credits talking about that 2050 date, and it really pissed off the American people. Most people who saw the movie and paid attention to the issue, and something like 15 million people saw that movie. So they created the Assassination Review Board. I'm missing a word. My memory is failing me. I don't remember the exact name of the board, but it was created in 1992, if memory serves, and they went through a great deal of documents and released something like 10 million documents. But there still are an enormous amount of documents that are sequestered, and they won't be released until 2050. The whole Kennedy case is fascinating, because I think that was probably one of the greatest seminal events in the development of the warfare, welfare, security state in the United States, because from that point forward, the executive branch basically has become a cog in the wheel of the system, as opposed to having individual civilians with the ability to make decisions pursuant to the interests of average Americans. There's a joke that goes around something along the lines of, Bill Clinton comes in and he is serving his first day in the Oval Office, and they close their blinds and roll tape and show a picture of the motorcade going through Daley Plaza from an angle that's never been seen before, and they show Kennedy getting shot from a different angle, and they roll up the blinds and say, Mr. President, do you have any questions? Giving him the riot act and letting him know that, you were elected president, but you're really not in power. You don't control it. We do.
Yeah, and speaking of the Clintons, our next scumbag story, seems like we always have them on Hillary, is we have a new book coming out from Roger Stone called The Clintons' War on Women, which he co-wrote with Robert Moreau. And I'll just give a very brief summary that he has, because I guess they interviewed some of the sexual assault victims that are still alive, that Bill Clinton allegedly sexually assaulted during his political career, even before he became president, that pets were killed, tires were slashed, late-night phone calls to silence Bill Clinton's victims, and single bullets were left in the driver's seat and things like that. So, and she hired private investigators to stalk around and harass, these people for that. So and there's a lot of other details in there, and, he said he has sources and evidence providing, that proves that these things happened. And, the book, I'm not sure if it's come out yet. It's coming out soon, though. But you have, the typical left-wing websites like Mother Jones and things like that saying, nothing in this book can be believed as true. It's all propaganda. It's all, as Hillary likes to say, the right-wing conspiracy against me, blah, 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 blah.
The vast right-wing conspiracy.
Oh, yeah, the vast right-wing, yeah. The vast...
Well, these revelations are not new. The amount of ink that has been spilled documenting the Clintons and their various sexual deviancies and power-monger ways, the Clinton death list, and on and on. This family is like our poster child for what is wrong with our government and our leaders.
Yeah, I agree. We wouldn't have a popular House of Cards show on Netflix without the Clinton, those details, like you said, being released. A lot of the Clintons' lives have been researched, and it was spun and created into that show. It's not all 100% accurate or anything, and they added different details and things like that from other people's stories. I heard Lyndon B. Johnson's life was added. Some of the details from there were also added in. So the character. The main character that Kevin Spacey plays on House of Cards is based loosely off Lyndon B. Johnson and Bill Clinton.
Yeah.
And the wife is based off of Hillary Clinton.
So our perennial scumbag. I mean, we got a serious competition here, folks. I mean, Ben Bernanke versus Hillary. Who's it going to be? Got another one?
Yeah, I have a few more stories here. Before we wrap up the show, the former head of Chicago Public Schools to plead guilty for bribery. This is from againstcronycapitalism.org, which actually has, it's a great website, actually has a lot of good stories about government corruption and crony capitalism for our listeners out there who want to, laugh or cry at some stories. Apparently, let's see here, let me read it. Bird Bennett was served a 23-count indictment. The lady's last name is Bird Bennett. Count indictment on Thursday, charging that she steered sweetheart deals to her former employee, Soups Academy. According to the Chicago Tribune, Bird Bennett is going to plead guilty to the charges and is cooperating fully with the investigation. The indictment charges Bird Bennett, an appointee of former Obama chief of staff and now mayor of Chicago, Rahm Emanuel, steered the contracts to Soups in expectation of hundreds of thousands of dollars in bribes and kickbacks. Oh, joy. So, I mean, this sounds like normal type of Chicago politics. Chicago's known for, I think Chicago's been super corrupt, one of the most corrupt, cities for politics for over 100 years now. So I'm not surprised at all, but for our listeners out there who are not familiar, so she got caught. I mean, look at there was a governor of Illinois, right, who was also corrupt. He got caught, and then she got caught. So, I mean, there's a lot of big money to be made, I guess, in political corruption in Chicago or Illinois.
It's the way of doing business in Chicago.
It's just amazing, though, and I'm sure a lot of these different government agencies are corrupt too. There's Chicago's got some real debt problems. They're one of the furthest out there in terms of pension shortfalls.
Right.
So they're going to be raising. If you live in Chicago or suburbs, you're going to see your property taxes go up. you're going to see your taxes across the board go up. You're not going to see them double overnight or anything, but they're going to boil the frog slowly. You're going to see, maybe a sales tax for food eating out. Like when I eat in Arlington County, which is a neighboring county to where I live, Arlington County, Virginia, Eric, there's a 10% eat out tax in restaurants now. That's, really high. Most people don't even notice it on their bills, but I do. And you see now, one of my friends lives there, one of my good friends, and he's paying a 2% value per year of the value of his car. And he drives a couple-year-old BMW, so it's like $1,100 a year in extra auto taxes. Welcome to Dystopia, where they layer on new taxes every year. They're not, going to double.
Fees, registration fees.
Well, yeah, I heard Las Vegas. Well, Las Vegas is Nevada and Las Vegas is thought of as a low tax pro capitalist state, but I heard they just increased the tax bill for cars the same too now. So a lot of people to get around, people aren't going to voluntarily pay this tax. Most people don't like paying taxes. So what they've done to get around this in the Las Vegas, Nevada area is they register their car in another state and just drive it around. But I'm sure that the government will come up with a way to penalize those people too. It's going to never-ending cat and mouse game of dodging taxes.
I wouldn't be surprised if they already, I don't know for sure, but I wouldn't be surprised if they already have something similar to what they do in California, where if you want to go and buy a car in Oregon, for example, but you live in California, you have to register it in California and pay the registration fees, and you cannot slip out of that system. And California has some of the highest registration fees around. I don't know what it is
even
now.
if you're a professional athlete visiting California, let's say you play in another state like Texas, and you go play the other opposing team in your league as a professional athlete in California for 15 or 20 days, California's sending you a tax bill, pretty big one. So I mean, California's they're always looking for new ways to tax their people. And if you own a successful business or you're a good investor and you have a lot of money coming in from different places and your income's growing, I mean, you're not going to really care if your tax bill is going up quite a bit every year. But if your income's stagnant or declining, you're going to notice. It's going to drastically hurt your discretionary income and your savings. It's going to hurt your standard of living. And we have listeners who, their parents live in New York, and their property tax has gone up in the last 10 or 15 years. It's double the amount it was 10 or 15 years ago. And, most people don't notice this. Most of the people I talk to, when I ask if their grocery bill's up, who are money managers on Wall Street, or their tax bill, a lot of them don't even notice it that much, or they say it's anecdotal. But, we have many thousands of listeners to the show, and I ask them if their bills are going up, their tax bills and stuff, and they tell me yes. So is it anecdotal then, Eric, if many people from all over the country are telling you very similar things? Okay, so we have two more stories, and then we'll let our listeners go. This one is the EPA is from a watchdog group is reporting that the EPA spends millions per year on military-style weapons, so body armor, fully automatic weapons, stuff you'd see the military using, and the government agency, which is the EPA, and they're doing this to look for environmental people that are violating the environment, that won't comply with the laws and stuff. This seems like overkill for the EPA, who's supposed to be, peaceful environmentalists, to be fully armed in body armor and things like this.
Well, at this stage, I don't remember the exact count, but there's more than 60 agencies under the executive branch that have arrest authority, shoot-to-kill authority, carry gun authority. They're basically a standing army if you aggregate all of them. Even the Social Security Administration is now authorized to conduct SWAT raids, or FDA or USDA conducting SWAT raids. I mean, people who have farming operations for, raw milk are being SWAT teamed. It's mission creep on steroids. We have an executive branch that's hyper-regulating all aspects of our economy and all aspects of our lives, and the ability to use the force of government is going up in turn because of the militarization of these agencies under the executive branch. And, the founders of the United States have got to be spitting in their graves because they had an abhorrent fear of a standing army to the point where, per their vision of what the country would be, we would only have a militia that would be called up and defend the country at time of need. Now, obviously, we have vastly different technologies today, and situations are very different when it comes to the great powers and how they fight each other in warfare and whatnot. But the securing the blessings of liberty and guaranteeing that we have a society that maximizes economic growth, because that grows out of the blessings of liberty, lower regulation and less government, etc., was where our founders wanted to see the country move. And instead we have the executive branch growing and growing, and now having police powers that are way beyond anything that the founders imagined.
Yeah, these are all symptoms of a totalitarian state. I keep tying my tongue up with that. Karl Marx would have been very proud of all the things that have been accomplished. Going back, I actually looked at, I think, the 1964-1967 Communist Party of the United States pamphlet and read their goals, and they've accomplished most of them in terms of like brainwashing people in the media and getting all the kids into government schools and teaching them that capitalism is bad and, hurting capitalism and things like that. So a lot of these goals, unfortunately, have been accomplished, and Keynesian economics was the better system to get a lot of these goals with wealth transfers and things like that to the poor. I mean, the middle class, who a lot of the people in power right now consider the bourgeoisie, they're being grinded to death through inflation and taxes. Through the government reported data says inflation is very low, but in real life, when you pay your bills each month and grocery bills and rent and healthcare and things like that, the exact opposite. People are being grinded to death, as Lenin said was the best way to destroy the bourgeois, through inflation and taxes, and they're taking away our rights, and most people don't even care. I mean, as long as the Kardashians are on or there's a good NFL game, most people don't even care that much anymore. Okay, well, our final story for this week, and I think this one's probably the funniest one out of the bunch, although some of them were funny and sad, or just scary. But this one is: a former federal security official pleads guilty to attempting to make meth after explosion in government facility. Okay, so this guy's named Christopher Bartley. He's a police lieutenant for the National Institutes of Standards and Technology, or NIST. It's a very large scientific building that the government owns and runs in Maryland, which is right outside of D.C. And basically, he blew up this lab. There was a very large explosion and smoke, and the blast sent the temperature to 180 degrees, and a silent heat alarm was activated. Otherwise, he wouldn't have gotten caught, because he had been cooking meth there, I guess, for a while. And he claims it was just a one-time experiment. They also started looking into him more, and I guess he was like abusing his other officer privileges of the government property at NIST. So I think he was having sex in government cars, praying for prostitutes and things like that. This guy sounds like a real winner, and he thinks he can avoid jail time with the plea agreement, that he's normally a good guy. Well, why are you trying to cook meth in a government lab? But I mean, this type of malfeasance, it happens a lot in government facilities. There's just a lot of theft. I've heard so many stories from friends, because I live right outside of DC, Eric. I've heard of one lady who makes she works with one of my friend's moms, or used to, because I think my friend's mom got sick of working in this government agency, and she's trying to transfer to another one. But I heard this lady only shows up to work like 3 days a month, and she makes $178,000, and she barely does any work, and she just dumps it on everyone else, and they can't fire her because of the government employee union. And then there's another big scandal recently. I'm not sure if it's hit the papers, but the government employees are talking about this in the last couple months. And this was a lady who was abusing her government expense account with her government credit card, and she was only making a couple $1,000s a month, maybe like $3,000 or $4,000 a month. She had like a fairly mid-level government job, and they searched her apartment, and they found out that she was maxing out her expense account, and she had, all these designer shoes and designer purses. Her apartment was filled with this, and they the Government Accountability Office, or one of the internal kind of internal affairs divisions like the police has, but there's different divisions of those for the government. They did a 30 or 40 page report on all the money she stole and where she spent it. She was going on European vacations on the government credit card, and guess what? She wasn't fired.
Yeah, right.
Because she wasn't fired because the government employee union said she can't be. So she just got a reprimand or something, and the other employees looked at her funny. But I mean, in a situation like this, I talk about incentives in the economy where the person is not going to get fired. This sends a message to the other government employees that, you know what, she can steal a couple extra $1,000 a month and go on vacations and go out to eat at nice restaurants and, you know, buy designer shoes and designer purses and designer clothes, and she got away with it. Why can't I get away with it?
Right.
So unfortunately, you know, the government just sends bad incentives throughout the economy. You have the unions protecting her. She should be fired. I mean, she stole. It's dishonest. Taxation is theft, inflation is theft, but this is outright direct theft. And, you know, she's going to keep her job, her health care, her benefits. She should be gone. And these are only two stories I'm reporting. I've heard others.
Yes, the entropy in our social system. I mean, when it is harder for people to get by from normal business, you know, you see a lot of people saying, "Hey, in particular with an entitlement society frame of reference. I mean, a great deal of people in our society now think, well, the system owes it to me. I don't have to work really hard to get what I need for life. The system owes it to me.
Yep.
I deserve it. I want my Obama phone."
Yep, and she stole so many things, Eric, and spent so much money that it required a 30 or 40-page report and investigation into it, and they still couldn't fire her.
That's amazing.
Yep. Well, welcome to Dystopia, folks. And you know, she's not the exception to the rule. So that's all I'll say. I've heard many other stories similar to this. There are some good government employees who do play by the rules, but when the incentive structure is that where you can steal this and not get fired, it's just unbelievable. It blows my mind. So I just want to thank you guys for listening today. Eric, anything else to say before we let our listeners go?
No, I have to congratulate them all for hanging in there. It's been going for quite some time, so it's probably a good place to end the show.
Yeah, and we're up to 10 episodes now. Welcome to Dystopia. So hopefully you guys will like this video and share it with your friends. And we're going to keep looking for funny stories about, you know, political corruption and things like that, or crony capitalism. And we're going to try to bring some gallows humor to the situation here, so it's not all full doom and gloom.
It's better to laugh than to cry. What can you say?
I agree. I definitely agree with that. That's been my. I've been looked at funny, you know, at funerals and things like that. But when a loved one died in the past, instead of me fully crying, man, I just burst out laughing. That's just my defense mechanism, I guess. I would rather laugh than cry. I feel better afterwards.
Besides,
okay,
it pisses off the people like John McCain when they're being mocked.
Well, there's a lot of things to mock him about, but yeah, Donald Trump's probably, you know, in public, it's probably not the right way to do it with the mainstream media, because, you know, he's a war hero and he's been in Congress. You know, they don't even. I researched John McCain when I was actually. There's a last rant here before I let everyone go. When I was a political science major, I was writing a paper, and I actually found out John McCain was involved in AbScam, and because he had just started his political career, some other longer tenured congressman fell on the sword and resigned for him. He was one of the guys involved in AbScam too, so he got a free pass there. His name was involved and it was buried, and he got like a slap on the wrist. He didn't get seriously in trouble where other people, you know, were imprisoned and had to resign and things like that. So it's just amazing. I guess maybe he promised them like some contracts or something like that when they became lobbyists, probably.
He was involved in the Keating 5 savings and loan scandal.
Wow.
He's got a storied career.
Well, that's just par for the course around here, and you know, I see more Ferraris and more Lamborghinis. Not too far outside of DC. They're probably either congressmen or lobbyists. Well, I just want to thank everyone for their time and looking into Wall Street for Main Street videos. We're going to keep producing content, and hopefully you guys like Welcome to Dystopia. I think we're trying to do things a little bit differently than the normal interviews.